If you're in your 20s and thinking about buying property, the biggest mistake isn't price. It's actually the strategy. Most people ask, how much can I afford? But almost nobody asks, what kind of ownership actually fits the life I'm building. And this isn't just for people who are trying to buy next month. This is for anyone in their 20s who likes the idea of building wealth through ownership and doesn't know where to start. Ownership begins years before actually buying. It's about how you structure your career, income, and financial decisions. The decisions you make in your 20s either compound into stress or wealth. And I believe one of the biggest blessings and gifts we all have while we're young is the opportunity to start building the life we want to live long term. We got to start thinking long term in our life if you want to have lifetime security, wealth, and freedom. So, there are 5 phases into how to build wealth and ownership in your 20s through real estate as the vehicle. But first, a little bit about myself. If you're new to my channel, my name is Michael Zarch. I'm a local realtor here in East Valley, Arizona, so Tempe, Phoenix, Scottsdale area. I'm very passionate about helping young professionals and young adults build wealth and turn renting into ownership through real estate and investing in real estate. So the first one isn't about income. It's about getting clarity. So guys, in order to buy your first property, you need to know where you're going. You need to know the life that you're trying to build. You need to have direction. Direction and clarity. You need to get clear and specific on your goals, short-term and long-term, within next year, 3 years, 5 years, 10 years. I want you guys to really think about this, because in order to build a life you want to live, you can't just make the wrong decisions because you don't know what you actually want. So what I mean by this is, where do you want to live? Do you want to stay local? Do you want to be in Arizona? Are you going to relocate? Do you value stability or mobility? All these type of things. Like, relocation is very important. Your job, your career. Are you entrepreneurial? Are you corporate? Is your job going to keep you stable here in Arizona? These are all important things. It's going to be about strategy at some point. Are you planning for a family? Are you getting married? Do you want to settle down here in Arizona if that's something that you are close to doing? These are all very important when thinking about when you want to buy your house, because a lot of people think about just buying their dream home, and that's great. You should strive to do that. But there's also ways to build wealth through owning properties, especially here in Arizona. But you need to have your structure. You need to have a path. You have some sort of idea that you want. Because buying the wrong property, if you have no direction, that creates friction. Real estate is illiquid, which means it's hard to convert into cash quickly. And I'll be the first one to tell you not to buy a property if you don't have a sense of direction, if it's going to fit your goals. You need to have clarity on what you want, your career, your family, your income, your goals, where you want to live, how you want to live your lifestyle before you make big choices like this. And I don't think a lot of realtors talk about that. So that's something that I really want to instill in people who are young in their 20s, because again, you have the advantage of being young and getting to choose the opportunity in life you want to live. If you're someone, for example, you want to relocate, and maybe you are thinking about relocating, maybe you don't know if you aren't yet, but you do want to buy a property here in Arizona, you can still do that. There's other strategies. For example, if you want to buy a rental home, which is a very good strategy, Tempe, Arizona is a great spot because it's a high rental rates. ASU students all need to rent homes during the school year. So you can rent out your home to students, and then that can cover your mortgage. You can offset your mortgage, and then it can become cash flow. That's very, very important strategy that a lot of people don't really think about. I've worked with a few clients that are focusing on that strategy, and this is just another way that once you have clarity and direction, then we can really start to get the things in motion. Next up is going to be income structure. This is going to be, can a lender approve you? How do you actually earn money? So your income structure is important. I'm not saying you need to make more money or anything like that. Yes, your income is very, very important. It dictates what you qualify for and your down payment and all that. If your income is not where you want to be, or your salary, and you do want to create ownership and freedom through real estate, then yes, you're going to have an honest conversation with yourself about, how can I build skills or get a different job that fits the lifestyle that I want to live. And those are all things that I believe that you can accomplish and do. You just have that conversation with yourself. Anyways, so what I want you to focus on here is your income structure, how you get paid. You need to focus on if you are a W-2, or a 1099. W-2 is your stable salary. You're an employee. That W-2s on your taxes become easier to qualify for because it's more predictability, stability. So when you're thinking about qualifying for a loan for a home, you want to have the lenders love predictability. They love stability in your income. So if you have 6 months minimum is what you need, or 2 years, but they like to see of stable income, that's actually a benefit that can help you qualify much easier compared to being an entrepreneurial or having being self-employed, right? Because sometimes when you're self-employed, your income fluctuates. At the end of the day, though, if you do have income and you have evidence of income, you're going to be fine. But that's just two things to note for when qualifying for a home. Your debt to income ratio. So this is going to be the most important ratio in determining what you qualify for. Essentially, your debt to income is the percentage of your monthly income that goes towards your debt payments on a monthly basis. This is just your monthly obligations. So, for example, if you make $6,000 a month through your job and you have $600 of total monthly payments between your student debt, your credit card, and your car loan, you're going to divide $600, which is your monthly debt, by your income, $6,000. That'll be your debt to income ratio. You want to keep that low, between 40 to 45%. Again, it just all depends on what you're looking to qualify, what you're looking to buy. But I really want you guys to think about that. Having a lot of debt is a lot of people have that. It's completely normal. It doesn't mean that you can't qualify, you can't buy a home. What's important is the debt structure on a monthly basis, right? So if your car payments are high on a monthly basis, that might affect you, right? If your student debt is high on an annual basis or it's deferred, that may not affect you as much. There's something to take into account here. I really want you guys to know that lenders care about the history. They're not talking about your ambitions and what you're trying to do with your home or how much money you plan to make. They care about the facts, the result, the proof of how much income you've made in the past. And so the more stable your income is, the more easier it is to qualify. Income does have tax records on it, so just make sure it's predictable. Next up, number 3. This is going to be your financial foundation. So phase 3 isn't about whether you can qualify. It's about whether you're financially stable and healthy to actually buy. Just because you can qualify doesn't mean that you should buy strategically. All right? I don't want people to go, especially young adults, to go and start just buying properties when it's not the smart thing for them to do. All right? I'm not saying everything needs to be perfect to buy. Just be prepared. This is all about being prepared on a mindset way, a habit change, so that the things can come into fruition for when the time is ready for you. For example here, just say you decide you want to buy, but you're not exactly financially, stable, or you don't have that good, strong foundation. A lot of things that people don't realize is that when you own a home, there are repairs, sometimes vacancy risks. Hopefully not. Hopefully that you don't buy a property or that has vacancy risks, that you've calculated that beforehand. HOA has fees. If you buy HOA, there's property taxes, insurance changes, things go wrong in the house. Like, those things all happen. So you need to make sure that you're financially stable. All right, I'm not here to scare you at all, but just keep in mind some of the things that happen when you own property. So there are 4 pillars, of foundation. Number 1 is your credit score. This is very, very important. I've talked about this in multiple videos all throughout my social media. Start building your credit. It's really going to be beneficial in any of your finances as you grow up here. Do not have bad credit, though. Do not get a credit card now and start buying all the time and your credit score going low. You want to have it between a 680 to 720 credit score when trying to buy a home. All right, credit score is crucial. If that is weighing down your debt to income, it's probably not the right time for you to buy. Next thing that I want to talk about here in the financial foundation is liquidity. Buying wipes out your savings completely. You're probably just not ready yet, which is okay. You're just going to need to build your savings up a little bit more. Remember what I just said. There are expenses. There are, if you have an AC that breaks, if you need to get a new dishwasher, some things need, repairs. So you need to have savings, an emergency fund. Let's be smart. Sit down, think about this, and make sure that you have reserves for when it's time to buy. This is an important thing. All right, I'm not going to sugarcoat and try to tell as much people to buy as quickly as they can, because that'll just ruin essentially your finances, your credit, and then it's gonna be a lot of stress into the future. And I want to talk about more debt structure. It's all about the margins between debts. I talked about having debt health in the last section, but this one is just about, if you have high interest credit cards, you need to fix that before you go into it. If your student loans and your car payments are weighing down your finances and your savings, it's not a smart decision to go ahead and buy. All right, let's all take these things into account. It doesn't mean you can't buy, but do not dig yourself a hole because you're ambitious and because you want to create freedom and ownership when the time is not right. A lot of real estate is about timing. It's why it's important to have a good realtor who's also cares about you, your life, your finances, and who can relate to you. And lastly here is down payment strategy. There are different options for the down payment. You've heard that a lot. I've talked about that throughout my videos. You have the conventional loans. You have FHA loans, which can be as low as 3.5%. There's different strategies when it comes to your down payments, right? Depending on interest rates, the lower the down payment, the higher the interest rate, all these types of strategies that fit your lifestyle, your career, your income, your goals, right? Just because you may qualify for a FHA loan at 3.5%, which is low, the down payment is going to be low, so you can qualify, may not be the smart choice for you because the interest rate is a little high. So maybe wait for you to have certain equity, or you can start out with 20% down payment so the interest rates are lower. If you're someone who you're going to be making a certain amount of income, then yeah, maybe do the 3.5% down payment if you just want to get into ownership and into equity quickly. And you know that you can start to pay these loans down because you're going to be making a certain amount of money. It's all about strategy and being strategic in these things here, and being educated really is really, really important on this. Just remember, just because you qualified does not mean you're ready. Ownership rewards preparation. That's very, very important, and you can start preparing right now because you're young and have a lot of energy. Number 4, and now you can probably guess, relating to strategy, the type of strategy. I'm sure a lot of people have not realized or didn't know that there's different strategies to getting into owning homes, into owning property, home ownership. And a lot of people think it's just about buying your dream home. And yes, I hope everybody can get the chance to buy their dream home, but to create wealth and financial freedom through real estate as the vehicle, there are different strategies that you can utilize and optimize depending on your lifestyle and your fit. Let's go over a few of them. First is primary residence. That's like living in your home with your parents. That's primary residence, right? That could be your dream home, right? Number 2, house hacking. If you don't know what house hacking is, you better get with the program. This is a very, 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 very strategic and beneficial strategy, or just way into home ownership that a lot of people don't utilize. House hacking, very, very quickly, I've talked about this before, is you live in one room, you rent the others to roommates, and then your roommates will essentially go pay off your mortgage, and depending on the type of property and loan you get, they can cover out your mortgage. I've had friends here in Tempe, Arizona, who've bought condos, 3-bedroom condos, or the parents bought 3-bedroom condos. They live in one of them, one of the rooms. They rent out to 2 other rooms, and the 2 other rooms actually cover rent for all 3, and then cover the mortgage. So the person, the kid living in the one room is basically living for free, and their parents are gaining equity and paying down the mortgage. So house hacking, really the only con for this is you're going to be living with a roommate, and it's maybe a smaller starter home, but it's a very strategic way to get into home ownership and really lower your living expenses. I'm going to move on to the other ones like condo and townhouse starter homes. They're very, very underrated. They're a lot cheaper. Maintenance is sometimes better. The loans can be easier to qualify for, and there's a lot of nice townhomes and condos, especially here in Arizona and in the East Valley. This is a great starter home to maybe even live for 1 year and then move out and then rent it out. You can qualify much easier when you live there, when you have residence and it's investment strategy. So don't overlook condos or new townhomes. Also, new builds, new constructions, they are a lot easier, cleaner to handle. There's a lot of good rates going on for buyers, like lower down payments. A lot of good programs for that. The maintenance is pretty easy as well, and you also get new appliances and stuff. So you don't need to remodel really for a long time with new construction homes. It's just nicer homes. Again, a lot of good rates with them too. I would check them out as well, especially here in Arizona, like Chandler, Gilbert, Mesa. Another thing though that I really, really want to touch on is delayed renting. If it's the time isn't to buy yet, just rent a little bit longer. Rent a little bit longer, improve your credit if that's something you need to do, save a little bit more, and then just go into home owning. Like, there's nothing wrong with that at all. I'm not saying buy now, buy this as soon as you can. It's okay to rent. A lot of people think I don't like renting. No, you should all be trying to get into home owning, but until then, renting's okay. Every ownership strategy though needs to have an exit plan, which is very, very important. So, right, if you're living in a home that you bought, a starter home, and you want to turn it into rental, right? How can I exit out of this? Right? Maybe you live in one home. Maybe you're living in the home you like right now, but you go and you buy a starter home to live in it because it's easier to qualify and it's less money. You live in there for a year, right? Then you rent it out to tenants and you move back into the home that you like. There's different strategies that you can take, right? Upgrading homes. Maybe you find a home that you can upgrade and it costs more and it appreciates in money, so then you can sell it, right? For a much higher price. Well, is there a property you want to hold long term? Is this property just a stepping stone property to another property that you're going to get more money? Ton of different strategies that you can work through and learn about when you're looking to buy your first home. And lastly, number 5 is timeline thinking. Everyone's timeline is different based off their income, their lifestyle, their goals, family, friends, school, all these things that contribute to your timeline. Even if your timeline is, if you're 22 right now and you just graduated, timeline is in 5 to 7 years, you can start taking action right now. You know, really, what I really want people to start doing while they're young is start thinking long term, because that's how you grow and compound your investments. Ownership isn't an event. It's a compounding process. The great thing about money is money compounds, and when it starts to work for you, especially long term, that's how you create passive income and generational wealth. You don't build wealth, though, by buying one house. You build wealth by building a path, a long-term strategy. Everybody can do this, right? So as far as your timeline goes, maybe for year 0 to 1, you need to start preparing your mindset to instill certain habits, saving more, spending less, improving your credit, right? And then maybe year 1 to 3, you start getting the income you want. You start getting the job, the promotions, the salary, and then you can really get your first acquisition, even if it's a starter home, a townhome, right? You live in it for a year, and then a few years later, as you gain equity, you rent it out for tenants. Then you go move into another place, or you just buy another rental. Use that money. If you buy a great deal, and then after a year, your first home, you start making money off of passive income, maybe that will help go into your second home you want to buy. And that's just a rental property. And then you buy another home to live in. Like, there's so many ways that you can do this long term and use leverage to create your timeline. But everyone's timeline is different. But that doesn't mean that you can't get it done. You can't start thinking now. Anyways, those are the 5 phases of building ownership in your 20s. Direction, income structure, having a financial base, strategy selection, and then timeline. The number one thing I really want to leave you guys here with is that change your mindset, which will change your habits, and habits compound over time, and they compound into wealth, and wealth compounds into growth, which compounds into freedom, financial freedom, and building equity and building wealth, all things that we want to have in building our dream life and the lifestyle that we want to live in the future. It's all in your reach. We're all young, filled with opportunity. Our situations are different, but real estate is so flexible and so diverse that there's so many ways that you can really leverage into your goals and your dreams. It's about being smart, though, being strategic, and thinking long term. So if you're serious about building your ownership here in Arizona, DM me OWN, or schedule a call below, subscribe to the channel, and thank you very much.